from the outside that crypto adoption and the crypto thesis has never been stronger. Yet, Bitcoin, as you said, 50% down from its all-time high. The market's realizing that even though crypto may be a success, both technologically and civilizationally, that doesn't mean that value is going to accrue to certain tokens.
Are cryptos about to make a comeback, or is this going to be the start of a bigger bear market that can last many years? That's the sentiment right now that I'm getting from a lot of economists. We'll find what our next guest is going to say about this issue and how AI is taking over the economy. Daniel Marin joins us. He is the founder of Nexus, very interesting project. We'll talk about what Nexus is up to and how this could change cryptos forever. Daniel graduated from Stanford in computer science. He was at the Stanford Blockchain Club, and he was a medalist at the International Physics Olympiad. And it's a great pleasure to host Daniel. You're also
Thank you, David. It's a
specialized. Yeah, fantastic to meet you. You've also specialized in AI at Stanford, so excited to get your take on the latest AI developments. Let's start with actually what crypto is up to these days. By crypto, I mean the entire crypto industry. Any trends that crypto seems to be, I guess, following or gaining momentum on right now, and then we'll transition to AI. Is it AI that crypto projects are kind of dovetailing off of? I ask this because Bitcoin is down, 50% since the beginning of October. And the NASDAQ, which was once very closely correlated with the Bitcoin price, has been diverging ever since October. The NASDAQ's been trending upwards, slightly upwards, flattish, while Bitcoin's down 50%, like I said. So clearly, capital isn't rotating into Bitcoin. Capital is rotating out of Bitcoin into other things. Are those other things other types of crypto projects, or is the entire altcoin space just kind of, as my friend would say, kind of dead right now?
Yeah, so the first thing that I would say is the crypto space is right now doing a search for its own soul. And it's trying to reason how to value tokens at all, right? There was an article that came out recently in parallel to the recent Citrini research article as well, but applicable to crypto. And it laid out an interesting thesis, which was like crypto achieved what it wanted to achieve. It brought the technology forward as it was bringing it forward. It achieved the institutional adoption that it was looking to bring. In fact, stablecoin supply has tripled. Every major bank is launching their own stablecoin. Stripe is launching their own layer 1 blockchain. And so it would seem from the outside that crypto adoption and the crypto thesis has never been stronger, with even the full force of the US government saying that it's a national priority. Yet, we have this results in the market, with Bitcoin, as you said, 50% down from its all-time high. The altcoin market, very much brought down significantly. And I think what is happening here is investors and the markets realizing that even though crypto may be a success, both technologically and civilizationally, that doesn't mean that value is going to accrue to certain tokens, right? Especially if these are projects that hold no fundamentals. And by that, we mean business fundamentals, right? And so like investors nowadays are trying to reason through how to value tokens. Some are utilizing price to earnings ratios for protocols to reason through it. Some other people are evaluating protocol GDP, gross domestic product, as total economic output produced by a blockchain. And, I would say truthfully, it's unclear what is the right metric, right? Because we don't use those kind of metrics to evaluate currencies around the world. We use them to evaluate the output of companies. Yet, in the search for a fundamental basis, investors are left without knowing where to go, right? So here at Nexus, we actually have a core thesis as a startup. We're a Series A startup based in Silicon Valley. Most of our teammates are here in San Francisco. We're surrounded by, all of the AI companies here in the Valley, your favorite ones that you may know. We certainly believe that a blockchain protocol should be a quite aggressive business that constantly tries to push the frontier of technology and also be a very strong and sustainable business, right? And so, we can talk about that, but that's part of the thesis that we've been preaching over the last few months about protocol sustainability, protocol revenue, and just how important that is for modern blockchains.
So when you founded Nexus a few years ago, I think 3 or 4 years ago, what was the main problem within fintech that you were trying to solve?
It was clear to me and to us that layer one blockchains were things of the past, and the meaning in the sense that it was clear to us that there was a lot of innovation left to be achieved for what an optimal world computer would be. In some sense, Hyperliquid had a similar thesis, right? For example, the Hyperliquid thesis was, hey, the user experience for people trading on blockchains, on decentralized exchanges, is just terrible. It's just nowhere near what a high frequency trader or like institutional entity would expect. And, they went ahead and built a better blockchain for trading, right? With us at Nexus, it's something similar, right? It's clear to us that decentralized finance, programmable finance is probably orders of magnitude away from where traditional finance is in terms of its computational and product capabilities. And not only that, the blockchain revolution is true. And if those traditional financial applications are brought on chain and replicated on chain, the possibilities due to the composability and programmability of those applications are to go beyond what traditional finance can offer, right? And so we've seen this gap, and also architecturally, right? Like when you take a look at other like layer one blockchains, let's say Ethereum, for example, their philosophy is very different, right? Their philosophy is we're not going to innovate too much at the layer one level. We're going to delegate that to L2s. Some other people are going to do the work of advancing science. Part of what we saw when we founded the company was that zero knowledge cryptography was augmenting at an accelerating pace, right? It happened that at the same time, not back then, 3 years ago, but in the last 2 years, AI has accelerated at an accelerating pace. And then the question is, if you are building the optimal blockchain company, then what should you do? What features should you bring to the market? How should you behave as a business? It was clear to us that the credibly neutral, passive approach in the modern era was just simply not going to hold up. One needs to be an active developer of technology. And that's been our thesis so far.
This is you cited the Citrini research report that kind of is going somewhat viral, almost, I guess, prompting the Federal Reserve Governor Christopher Waller to make a remark about reassuring us how AI is not going to blow up the job market, because this is the title of this particular report, the 2028 Global Intelligence Crisis. It's making a prognosis that by 2028, the unemployment rate is going to go to 10%. This is also a pretty interesting paragraph here.
That's right.
When friction went to zero, by early 2027, LLM usage had become default. The part that should have unsettled investors more than it did was that these agents didn't wait to be asked. They ran in the background according to the user's preferences. Commerce stopped being a series of discrete human decisions. It became a continuous optimization process running 24/7 on behalf of every connected consumer. By March 2027, the median individual in the United States was consuming 400,000 tokens per day, 10x since the end of 2026. And again, this is just the author's projection of what may happen. But you have an AI background. Tell us, are we going to see a day pretty soon? By the way, this is predicting 2027, which is next year. Early 2027, we're going to see a time when a lot of agents are going to start optimizing commerce again in the background and reducing a lot of friction between trade, which is what blockchain ultimately aims to accomplish. In other words, these AI agents are going to take over blockchain layer ones and layer twos in their intended purpose. Do you see that happening?
Yeah. So I was just giving a talk, I think, in Denver and Hong Kong, where we were discussing, what is about to materialize. And I think what is about to materialize is something that it's even hard for humans to comprehend. Blockchains, as you know, provide the battleground the platform where money can be moved, right? Like you and I, David, as simple humans, right? We reason about sending chunks of money in discrete steps to people, right? But the truth is that a blockchain can do extremely complex money movements. For example, the concept of flash loans, which is something that it's hard for humans to even understand, or like this complicated like sequencing attacks on applications, right? Such as I move money, I take a loan, I participate in the governance of this protocol, then I take yield, and then I use that money to vote on something, right? So there exists this like multi-chain, multi-complex sort of like trading strategies that generally hedge funds take advantage of in order to extract capital through arbitrage, right, and make money. What we've seen recently over the last few weeks with OpenClaw being launched, right, is we have people telling OpenClaw that their OpenClaw agent, like, hey, agent, go and make me $100, right? And the agent goes, analyzes, various sort of like market opportunities. It chooses a blockchain, and then we've actually seen them just launch meme coins. And I mean, I think many of them have lost money, but a few of them have made money, right? And so I'm answering your question, right? Like, does that make blockchains irrelevant? No, right? Like blockchains, it's like the internet, right? Like AI is not making IP and the internet irrelevant, right? It just transforms to become a system in the background that provides the playground where all the rest of technology can happen, right? And so for agents, for money movement, and so on and so forth, this whole mesh of blockchains and everything that's happening, for them, that's just like something useful, right? Something useful where they can either move money or extract money or run arbitrage strategies. And that's pretty much what we're seeing. Stripe announced in their 2025 letter a couple of days ago a similar vision, a similar thesis, where they were saying, and actually Circle as well, right? It's like, hey, the world of blockchain and AI is unifying. We're going to be seeing all of this AIs moving money through stablecoins everywhere across all blockchains. And this seems to be inevitable, right? And we also just saw Meta a couple of days ago, if not yesterday, announced that they, were launching this like massive stablecoin strategy, right? So, bottom line, blockchains are certainly not going to be replaced. They're just going to become, entities in the background where, agents and humans just transact.
Speaking of agents and crypto, this is from Coinbase. They're now introducing, this is from 2 weeks ago, agentic wallets. Give your agents wallets. I haven't looked into this in a lot of detail. Maybe you know more about this than I do, but I'm talking about the intersection between AI and crypto now and what's next for both spaces combined. And I think this is one example. First of all, can you comment on agentic wallets that are probably going to become more mainstream? And second, more broadly, how do you see the future of AI intersecting with crypto in their adoption use cases?
Yes. So as of the last 2 weeks, we're seeing an explosion of, I wouldn't call them agentic wallets, but like agents with wallets, right? Which is different, right? So an agentic wallet aims to be a tool for a human to better use their finances, right? An agent with a wallet is what it says, right? It's an actual autonomous agent that has full access to a computer or a server, and one of its tools is a wallet, if not hundreds of wallets, right? So it's different. Hasib, who's the managing partner at Dragonfly, one of our investors here at Nexus, I'm actually a seed investor, I think famously thinks that agentic wallets are a little bit overhyped. And I share that feeling in the sense that it is true today that almost no one is willing to trust, a probabilistic agent to move money for them, right? If that's what we refer to as agentic wallets. However, it is different to talk about like agentic financial advisors, right? Like an entity that gives you recommendations and, best steps that then you need to, accept or reject. There are other companies here in the Valley that are attempting to do like agentic commerce, meaning, and even ChatGPT is doing that, right? For you to be able to ask ChatGPT, like, hey, I want to purchase, I don't know, some food, and for it to give you like a few many options and then automatically pay for you, right? I would say that my particular perspective here is, as I was mentioning earlier, I don't think we will see a lot of success with so-called agentic wallets, but instead with agents with wallets, right? So we're seeing an explosion of agents managing wallets to do attacks, to on protocols, to do like cybersecurity research as well, and just to move money and make bets, right?
It's a good thing you're commenting on things that are overhyped, because investors would like to understand AI agents that actually work versus things that are overhyped. So this is an IBM stock chart that I have in front of my screen. Since the beginning of February, the stock's down about 30%. Just in the last week, it's down about 13%. In one day, it's wiped out basically $40 billion because Anthropic just announced that it has an agent now that can read old COBOL code, which is a big portion of IBM's business, is compiling and maintaining COBOL codes. So investors are throwing a fit. From what you've gathered and parsed together and know about IBM's business and Anthropic, do you think that this was an overreaction? And then more broadly, we can comment on how investors can react to all these agents popping up pretty much every single day.
Yeah, that's an interesting question. I would say whether it's an overreaction or not depends on the competence of IBM, right? So one could certainly argue in favor of this being a reasonable reaction, because what we're seeing in the market is brutal. Right? It's not only with IBM; it's even like newer AI startups. People are making articles about how every time that Claude announces or Anthropic announces a new product. A whole new startup category is killed, right? And then there is some truth to that. Interestingly, Anthropic's main investors, Lightspeed, are also Nexus's Series A main investors, Lightspeed, right? So we certainly have similar connections here in the Valley. I would say, having said that, on the opposite argument, if IBM takes on the opportunity, becomes significantly more efficient, reduces its costs, and continues developing their client relationships, then it is possible that IBM could become simply a more efficient enterprise, such that the reduction in price could be an opportunity for other purchasers, right? But that depends on IBM's strategy and its aggressiveness. Admittedly, I don't know much about how aggressive IBM is with respect to this like AI push, right? Google is certainly.
It's kind of ironic that the tech industry, probably, especially legacy tech companies like IBM, are the first casualty in this AI wave. And if I were an investor in this space, and I'm not trying to give financial advice, this is just my own thinking here, I'm asking myself, why shouldn't I just be shorting the entire NASDAQ? Because when you think about it, I mean, what's stopping, your side, your neck of the woods, Silicon Valley, from just producing, cannibalizing AI agents every single day? Can you just help me evaluate this logic here?
So that was part of the logic behind the Citrini research article, right? And unfortunately, I will say that my perspective is that I agree with that logic, which is when you take a look at the S&P 500, the overall economic output of the U.S. economy, it is indeed growing, but it's growing only thanks to the top 5 companies behind the S&P 500, right? Everyone else is kind of struggling. And what AI and technology as a whole historically do is that they create higher concentration of economic productivity. It is quite interesting. The world could have ended in a different place. For example, Google could have ended up being, a giant that was very inefficient. And just very slow moving and very bureaucratic. But interestingly, we're seeing Google itself and other companies have their founders pretty much behave in this AI race as if they were running a startup, and they're competing ferociously, right? And then you have the rest of Silicon Valley, being invested with a lot of VC dollars, further producing, trying to extract any type of efficiency possible in the positive sense, right? Like these people are trying to make things significantly more efficient than what was possible before, saving many businesses and clients millions of dollars, right? But what that means is that through all of that efficiency improvement, the incumbents just lose their business if they're not unable to adapt. So my answer to your take is, I would say two. I would say I would think is appropriate, and there's almost, I think, no reason to believe that Silicon Valley won't be able to continue innovating at a faster and faster pace. But with respect to any particular immediate trading strategies, you can also assume that perhaps the market has already absorbed that type of analysis already, right? So that it may be underpriced.
Okay, I'm curious how you raised capital at a time when VCs are, jumping into AI with both hands and feet, sometimes even blindly. Nexus Laboratories raised $25 million from Pantera. This was dated June 10th, 2024. Yeah. So it's not news, but I'm curious what your pitch is and how you drew capital to your startup when, like I said, from 2024 even to now, AI startups continue to be the dominant hot play among VCs in Silicon Valley. You would know more than I do, and you comment on this. How did you differentiate yourself?
Yeah, so I would say two things. The venture capital landscape has evolved so that Series A right now are like big seed rounds, right? And the bet that Series A investors were making with us and are making with us and other similar companies is that of a team bet. So when we raised a Series A, we raised it primarily based on the fact that we just had this stellar team behind us, right? For example, the other person in this picture, Jens Groth, is our chief scientist. He's like a super, super well-known professor of cryptography, right? I studied artificial intelligence, as mentioned, cryptography as well, Stanford. And then we have, a list of other really, really winner people on the side of business, right? And so part of the thesis behind Nexus is that verifiable computation is a new paradigm of computing, just as how intelligent computation is. And that verifiable computation and intelligent computation have certainly a lot of ways to interact with each other that again propulse, new primitives. One of those being new economic primitives, such as blockchains, such as trading technology, such as privacy preserving, perpetual exchanges, and so on and so forth, right? And so at Nexus, we're in that business, in the business of applying verifiable computation within the realm of intelligent computation, so to say, right? Particularly applied to finance. And so that's number one. And then number two, what I would say is even with all of the developments that are happening in AI, well, we have massive developments happening in crypto as well, right? Which is the massive, the main line of application of verifiable computing. And so, and for example, you see companies like Hyperliquid making $1 billion in annual revenue, right? Which is with a super, super, super lean team, which is something, unseen, even in the AI space. You see other companies like Athena as well, driving, I think it's probably more than $20 million in revenue per employee. So in crypto, there's this possibility of having a gigantic market impact through the power of economic incentives, while having a very small and lean team, right? And so part of the investor thesis is, okay, combine this to maybe this team has a chance to apply their technologies and enhance the financial world in the era of AI. And in addition, they certainly have the expertise to navigate the crypto world given their previous experience. So, that is their bet. But I mean, we still have to see if their bet will play out.
Well, then I have to bring this up, which you probably heard about 10 million times already. I'll bring it up anyway. But just this article came in today from New Scientist. Yeah. Breaking encryption with quantum computer just got 10 times easier. The commonly used RSA encryption algorithm can now be cracked by a quantum computer with only 100,000 qubits, which I guess is significantly less than what it was taking before. We're getting closer and closer to breaking encryption data now. Just help the layman understand what this means for cryptos and what this means for crypto investors.
Yes. So two answers there. One is this is interesting. Let me just give you some background. So before attending Stanford, I studied physics, and in particular theoretical physics, significantly. Right, quantum cryptography. It's right at the intersection of theoretical physics and cryptography. It happens that when I was going to college, I was invited to Yale, to the Yale University, and I was talking with a professor at the Yale University about quantum computing. As I was discussing which college to go to, and I was talking with one of the core researchers there. He was quite skeptical about the marketing and the development of quantum computing for it to be applicable to general purpose computing. However, the current advancements have been good. And what we're able to do with quantum computing is indeed do very targeted special computations, such as breaking RSA encryption, right? It's not something that we can do today, but it's something that is getting closer and closer and closer. In fact, our chief scientist here at Nexus, he constantly gets asked, what is an estimate for this to happen? I was just talking about this with him. He estimates is 10 years. 10 years for us to break RSA encryption with quantum computers. And when you think about it, 10 years, it's not a lot of time. It's coming soon. So what does that mean? And so here's where my two answers come. Answer number one is it's not that bad from a cryptography standpoint, because you can simply increase the size of keys, the size of encryption keys, to be double. Like you can just increase the security by double by adding more digits to your keys, which can effectively render the whole quantum acceleration non-significant. It would mean that pretty much every cryptographic protocol needs to duplicate or even triplicate, if we want to be really safe, their total storage and their total efficiency, right? But this is a well-known mechanism. You can increase keys from 128 bits to 256 bits or to 512 bits. And that just massively grows the defensibility of your protocol. So if you ask,
is that something that the average crypto holder can do to bolster their security on the keys? No. So blockchains need to upgrade. Okay.
In order to achieve this. It's not a hard upgrade, but it could be a breaking upgrade. So that's my answer number one. It's not too hard to become quantum resistant just by increasing the security of protocols by half. And it's a little bit counterintuitive because exponential numbers, essentially increasing a number by half, just makes breaking this fully impossible, pretty much, almost, right? But let me give you the other answer. And the other answer is, how does this affect Bitcoin?
Yeah.
For example, right? That has no governance, that has no ability to upgrade, right?
Exactly.
Well, it was designed so that you couldn't upgrade it. There is no foundation. There is no central company. If indeed RSA is broken, that would mean, probably, a very bad future for Bitcoin itself. And so the question here is it's a social question, right? Will the Bitcoin community be able to come together to, face what is, a long-term existential threat and do an upgrade to the Bitcoin protocol, which would be historical?
Is that technically even possible?
Well, it's technically possible. You need all of a majority of the validators in the Bitcoin network to switch unanimously, right? But it's never been done, right? It's not in the philosophy of Bitcoin to do that.
All right. Well, finally, let's close off on any other important crypto trends that that you're observing and Nexus is possibly trying to capitalize on. We've talked about AI a lot. We haven't talked about tokenization. We haven't talked about stablecoins. Tell us about those spaces and anything else that you're following.
Yeah, so we recently announced, and by that I mean a week ago or 2 weeks ago, the launch of the Nexus stablecoin, right? USDX. This is in collaboration with M0, the M0 protocol, which also backs MetaMask's stablecoins and USD AI's stablecoins, and then some other stablecoins. They're actually a Pantera Portco, such as us as well. They were invested by Pantera Capital. And we're very excited about this because pretty much what this makes is Nexus one of the first layer ones to have a native stablecoin associated with them. Another one, for instance, is Mega ETH that also announced a stablecoin in collaboration with the Athena protocol. As you may know, Nexus also is building an enshrined exchange, perpetuals, spot and perpetuals exchange. And as I mentioned at the beginning of our discussion, protocol sustainability and fundamentals now matter more than any time before, right? And we're very excited about the economic properties that a native stablecoin in that exchange will have in the whole sustainability and the future of Nexus layer one, right? And so, and in particular, we plan to collaborate with many other stablecoins as well with respect to like the exchange itself and which native quote assets it uses to trade, right? So, we can talk about many things, right? But we may not have time today.
Absolutely. Well, we can follow up next time on some of these trends, but just tell us about the mainnet launch and what we can look forward to if we're following Nexus.
Yeah, exactly. So the Nexus mainnet launch is upcoming following 3 major testnet releases that we have done. This will feature an EVM layer 1 chain. That is the first step towards this greater economic machine that is being built, which will include the exchange, the stablecoin, and so on and so forth. And so there is no confirmed date for mainnet launch. This is something that the company has been preparing for quite a bit, and it will be the genesis moment for the Nexus project, right? And so, we're excited about people testing it out, stress testing it in particular, and there will be more exciting things to come.
Thank you. Where can we follow Nexus and yourself?
Nexus.xyz is our domain name, and on Twitter, it's Nexus Labs. And so all the information is there.
We'll keep people updated, so follow Nexus there. Thank you, Daniel, for your updates and for your information. We appreciate it, and thank you for sponsoring this interview. We'll look forward to speaking with you again next time. Take care for now.
Thank you, David.
Thank you for watching. Don't forget to like, subscribe.